What is up? So I just wanted to make a video that covers absolutely everything I know about trading. So I'm going to start with daily bias, and then I'm going to go into my entry model, and then I'm going to go into probing order flow, and basically what I use every single day to trade. So let's start with daily bias here because daily bias is actually the first thing that I do every single morning before taking any trade. I determine my daily bias because daily bias will show you how to size into your trades. It will show you where the market's going, and it's just a great tool to have in your toolbox so you know exactly you know how to trade when the time comes. Yeah, so basically what I use for daily bias is previous day highs and previous day lows. So for example, right, we all know this. Let me just write this out for you. Right, I just wanted to write this out for you so you understand what I'm talking about, right? If price closes above previous day high, target previous day high, that's a bullish, order flow. If price closes below previous day low, target previous day low, that's bearish order flow. If price wicks above previous day high and closes below target previous day low, that is a bearish reversal profile. And if price wicks below previous day low and closes above target previous day high, that is a bullish reversal profile. So I am on the daily time frame here. This all is on the daily time frame. Let me just show you what I'm talking about. Okay, so as you can see here, price wicks above previous day high and closes below. We can anticipate, our new target is this previous day low. Okay, what happens here? Price wicks below this previous day low and closes above. So now we target that previous day high. And as you can see, once again, price wicks above and closes below. So we target previous day low. Again, this is a lot of consolidation here. Price wicks below, close above. We target previous day high. Obviously, target is never met. And we just, dip. Okay. So once we dip, this is probably a news candle or something. Since we close below this previous day low, right down here, we target previous day low. And that's exactly what we do. What happens? Price closes once again below. So we're targeting previous day low again. Boom. Okay. Price closes below. Target previous day low. Okay. On ES, we probably had some bullish SMT here. On ES, price probably went ahead and wicked below this previous day low, which means we would target previous day high. Once again, target a previous day high, price wicks above, close below. So what is that? Bearish reversal profile, price closes below. Boom, right? Once again, and we can just keep doing this throughout the whole chart. This is how I determine my daily bias every single day using candle closures. Now I want to go ahead and move into my entry model, which is, obviously before I go into my entry model, you just have to be aware that if you're not aligning your time frames, you are basically setting yourself up for failure. So let me go write out these time frame alignments here that you should be using every single day to trade. Okay, so I just wrote out these time frame alignments here. This is how you should be aligning your time frames. Obviously, my entry model relies on multiple time frames, so we are trading a lower time frame change in state of delivery out of a higher time frame PD array. So for a weekly PD array, 4-hour change in state of delivery, right? For a daily PD array, we're waiting for a 1-hour change in state, 4-hour PD array, 15-minute change in state, 1-hour PD array, 5-minute change in state, and then 15-minute PD array, 1-minute change in state. And that is the basis behind all of my entries. Obviously, we have to have some SMT there. That is also a key part of my entry model. I personally think that SMT is the most important confluence in any trading system. So if you don't know what SMT is, basically SMT is an imbalance between two correlated assets. So personally, I trade NQ, which means that the correlated asset for NQ is ES. So let me just pull up ES here and show you what I mean. So here is a great example of SMT. Okay, we have this candle, right? We're way above this candle on NQ, and then in the hourly time frame on ES, you'll be able to see once I zoom out here that we are still trading, right? We are still trading, this candle does not break a new high. Over here on ES, we see we pull farther into this hourly fair value gap here. And on NQ, we pull higher into this fair value gap here. On ES, we don't even have a fair value gap here. So this would be some bearish SMT right there. It's just an example of SMT. And on NQ, if we move into the daily time frame, you'll be able to see something very interesting. Okay, so going into tomorrow, I'm bearish. Why? Because on ES yesterday, we swept this previous day high and closed below, which is what? Which is a reversal profile to the downside. So this would be my target, which is previous day low. But you see, NASDAQ, on NASDAQ, we did not sweep a high. So this is where you're gonna have to start using both of these assets to determine your bias, because this happens a lot in which NQ won't sweep a high or sweep a low, and then it will go down, and you'll have no idea why. But then you go ahead and check ES, and it turns out that ES actually swept that high or that low. And that's just a great way to use SMT to your advantage. Circling back to my entry model, like I just said, actually, I want to write this out for you so you understand. Okay, so this is the basis behind all of my entries. All right, so you'll see here, right, tomorrow would be a potential good short entry here. Why? Because higher time frame PD array. We're looking at the hourly time frame right now. So as you can see, price pulled into this hourly fair value gap, and we just covered that bearish SMT. ES swept that previous day high, but NQ didn't. So that's some bearish SMT since it's at the highs, right? A little tip for SMT: if we have SMT at the highs, that is bearish SMT, indicating that price will go down. If we have SMT at the lows, that is bullish SMT, indicating that price is going to go up. So as you can see, we have this bearish SMT, price just pulled into this hourly fair value gap, and the last checkpoint for our entry would be that lower time frame change in stated delivery. So depending on what time it is, again, I'll get into that later. I just wanted to cover my entry model for now. I'm going to cover that later in this video. We have to get a confirmed change in stated delivery, which we do right here. So if you read any of my tweets on change in stated delivery, you know that in order for a bearish change in stated delivery to get validated, we need a candle closure below the series of up close candles that swept the highs. As you can see, this series of up close candles on the lower time frame, on the 5 minutes, since it's correlated with the 1 hour, the 5-minute time frame, this was the leg of up close candles that swept the high, meaning that once we get a closure below this level, that is a confirmed change in stated delivery. And as we can see, this candle right here, this was the candle that changed the state of delivery. So now what we would do, as you can also see, we created this bearish fair value gap right here. So, depending on what time it is, this would have been a good trade if this happened at like 9:50, which is the macro that I trade specifically. Now, I wanted to get into time and price since I just mentioned, a lot about time. I think it's important that you understand how time relates to price because it is more related than most of you think. I actually only trade the 9:50 macro. So let me just write out a few things about time and how you can use it every day to help your trading. So this is basically all you need to know when it comes to time and price. It is very important when you trade to trade a specific session. I personally trade the New York AM session because that's typically the one with the most volume. And this is exactly how I trade the AM session. So if we have 8:30 red folder news, we can anticipate an 8:30 Judah swing and a 9:30 distribution. So when I say Judah swing, I mean a manipulation. So what happens is once market opens, or not when market opens, I'm covering 8:30 news. So at 8:30, when the news happens, price will typically manipulate into the opposite direction and then distribute at 9:30 into that predicted direction. Okay. When we have no news, this is the typical trading day. We can anticipate a 9:30 Judah swing and a 9:50 distribution. And that's exactly why I trade the 9:50 macro, because price manipulates at 9:30 into the opposite direction, and it's typically done between like 9:45 and 9:50, and then that's when price distributes into the actual direction that I anticipated. So a great example of this would be this daily candle. Okay, so we can probably assume that when price opened up right here. Okay, because this is an up close candle. Okay, price probably opened up right there, manipulated higher, right? That was probably at 9:30, and then distributed lower. And so the 9:50 macro allows you to catch this distribution, and you don't get stopped out by this manipulation higher. So that is how time affects price. If you combine all three of these concepts, that is a pretty bulletproof trading model. Just in general, understanding how time affects price, and then going in with this entry model, waiting for all these confluences, and being able to determine your daily bias. That is, the basis behind every single trade that you take. Also, another little tip here that nobody really tells you, if you're trading an eval, you can be a little bit riskier with how you play because you are not funded yet. So with an eval, what I typically do is I size up more than ever just to pass that eval, and I move my stop to break even immediately. So if there's a probable trade, if I think a trade is going in a certain direction, I'll use two, sometimes even three NQ lots just to maximize that move. I'll either keep my stop really short or I'll move it to break even almost immediately, just to make sure that I catch the move, and it just lets you catch that pass that eval faster. That is a little tip for evals. Obviously, if you are a beginner trader, you should not be doing that. If you're a beginner trader, you should be trading your eval as if it's a funded account, just so you nail those executions, you learn how price moves, and you could actually go ahead and use that every single day. But if you're more of an intermediate trader and you've been struggling to pass your eval, or you just, you understand price, you just haven't, actually passed yet, you can, size up, move your stop to break even almost immediately and catch those big moves just to pass your eval. And then right when you get to a funded account, you go back to following your rules how you normally would, and, proceed with caution. Maybe even trade micros instead of minis. But that's just how I trade. This is everything I just told you in this video is the basis behind every single trade I take. Every single trading day, I do these three things, time and price, daily buys, entry model. It's very important to wait for a change in state of delivery before you get in any entry. A lot of people try to anticipate the change in state of delivery, and that is how you get stopped out of your trades. It's crucial to have all of these confluences present in order to take a trade. And you have to be okay with not trading on specific days. Some days, this month has been a great example. Some days are really difficult, and price just won't deliver, and that's okay. You have to be okay with being able to step away and just not trade. That's a skill in and of itself. So with that being said, I hope this video helped. Let me know if you guys want more videos like this. I'd be happy to give you anything you guys want. Just go ahead and leave a comment in the description with a question, and I'll make a video on it. I love making these videos. I get tons of good feedback in my DMs, in the comments. It's just all around positive. So if you enjoyed this video, go ahead and like and retweet this, and yep, have a great one.